Hi, welcome to this video date, which is on the 19th of October. It's Saturday. Just be looking at a pair that really interests us at the moment. It's one of our favourite pairs that we're focused on. It is USD Try, a lesser looked at pair, but you probably got it on your trading platform. Now, regular viewers will know we like to focus on any pair that has really good volatility. Okay, now doesn't matter if it's a minor pair. You want volatility as a forex trader. Many of the majors have been pretty dull in our view, but USD Try, nice and volatile. You want your money working hard. And in terms of this trade setup, I think it looks really good. And we've done a couple of videos on USD Try over the last couple of weeks, tracking a trade we took. We banked that for a profit. The dollar has pulled back, and we now think the dollar looks a great risk to reward buy in terms of the fundamentals, the sentiment behind the chart, and the technical setup looks really good as well. Now, what we will do is we'll go and take a look at the charts, but please do keep in mind it is my view as of this moment in time. It can, of course, change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including this one, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at the trade setup. Right, on the chart of USD Turkish Lira daily. Now, in terms of this pair, just listed out the targets we've got at the top and the percentage change if we reach the targets with no leverage. 620 would be the first target, so 7%, and then 7, which would be, if we got there, 20%, which is last year's high. Now, in terms of those percentage gains, they're really good without leverage. So yeah, when you're trading volatile pairs, you don't need to use big position size, just a position size in line with the volatility of the pairs. This one only requires a small position size in our view and can give, well, really good profits. Now, before we do the technicals, I just want to look at the fundamentals and sentiment. Now, in terms of point number one, the economy is weak and inflation is high. Well, that's not a good combination for any economy. The economic policy being followed by the Turkish government is totally flawed. When they were talking about it a few weeks, just saying it's got no chance of helping the Turkish economy move forward at all. In terms of the central bank, it's cut interest rates from 22% to 16%, and there's more cuts coming. And it's the interest rate that really attracted foreign investors into the lira. And you can see it here. It's all to do with the carry. You get some capital appreciation and a 22% interest rate annually in your favor. So a lot of traders park themselves short the USD, but that carry trade is now broken down in our view. And carry trades, to be attractive, don't just rely on the interest rate. I'll come back to that in a minute. Foreign debt is high in Turkey, highly reliant on inflows from overseas. Okay, and those capital inflows, in terms of carry trades or just investment in Turkey, traders are a little bit nervous of Turkey at the moment for reasons I'll come to in a moment. Just this point here, foreign exchange reserves are low at the central bank, which means if we do have a currency crisis, which I think is possible, like we did last year, Turkey doesn't have the money to stabilize the lira. Now, the real problem in terms of confidence in Turkey is President Erdogan. He's very autocratic. He wants to meddle in the economy and influence the central bank. He calls interest rates the mother of all evils, and he wants them down. Well, it's okay to cut interest rates, but you can't do it too aggressively because obviously you've got inflation high. But that's what he wants. Also, his incursion into Syria. That's making investors nervous as well. It's geopolitical risk, and you've probably seen it in the media. Obviously, Turkey trying to do the safe zone in Syria. There was supposed to be a ceasefire at the weekend. That appears not to be holding. Turkey has been accused of using chemical weapons. And you've got Donald Trump, who gave Turkey the green light, effectively, to go into Syria. And he did say that, if the Turkish forces went too far, he could obliterate their economy with sanctions. Now, he did put some sanctions on Turkey, but they're just token. I mean, they just don't impact on the Turkish economy. Might he be forced to basically do more sanctions? Because the geopolitical situation, it just doesn't seem to be getting better, does it? It just doesn't look good. So there is the possibility that Trump might come under pressure. He's already under pressure from both sides of the House. Okay, just see how that goes. President Erdogan, very stubborn type of guy, wants his own way. He's not particularly interested in foreign criticism from the EU, the US, or anyone else. He's a bit of a wild card. Okay, so that's not looking too good. Then you've had risk on. We've got the potential for risk off. In our view, in risk on, emerging market currencies will tend to do okay. And when you get risk off, they don't. Okay, so that's an additional factor that come into play to hurt the lira. And the USD is generally corrected across the board. That correction, I think, has nearly run its course. So, right, let's look at the technicals. And a very fast-moving volatile pair, featured this in a few videos, this pair. Got a nice trade there through the 20-day moving average. Couldn't get out on that spike, got out on that red. But the move was in excess of 8%, which is more than Euro USD has moved in the last 8 months from top to bottom. So you see, just in a short period of time, you get a good result. Did another trade, which is one we featured in recent videos here, this blue, on Syria, the rumour of them, on this candle here, the rumour of Turkey going into Syria, we bought, came back a little bit, then pushed off as Turkey moved forces in. Then we went up, prospect of sanctions on these two blues here, and I thought we would follow on to the upside. Basically, Trump's sanctions token, fall back, get taken out on stop. It's an okay profit, and then we've run on to the downside. Now, in terms of, if we look at the background, I just don't see the USD falling too much on the Turkish lira. Of course it could, but if it fell more, we'd possibly look to buy on strength. But in terms of the way it is now, I like it. We come back to the 20-day moving average. We're looking, if we're bullish, for this 20-day to provide support. It provided pretty good resistance before it decisively got taken out there. So could be support. So that will be our first support line. I'm going to buy it on strength if it does occur. So first support line there. We don't want our stop too close. From our perspective, we'll be back here. Sorry, let me just do that. Second level. Now, in terms of coming into this trade, how do we do it? What you've got here is blue push up, blue push up. It's a trajectory, then a big red down, then break. Looking for the break, obviously lower, to fail and us to go back through the level. So basically, you're coming in through the 518 level, which is the open of Friday. So if we do reverse up, then we think it's a buy. We should go up to this level. Obviously, we're looking for a possible run on to 20. It's possible because Turkey's in such bad shape. Last year, you can see how fast it moved on that currency crisis. We could easily see that again, but 620 for us is a realistic level to get back to. So I like the look of this trade. Good risk to reward. We firm up, get through the level, we'll get back long. Obviously, if we drop down, we'll reevaluate the trade. This pair is in the guest pair section of our member center if you wish to follow it on a daily basis. But that is the way I see the trade right now. So we'll see what happens in the coming week. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.